Let's ask Schwab Center for Financial Research's Chief Investment Strategist, Ann Sonders. Welcome back. It's nice to see you.
Nice to see you too, Scott.
Sorry I'm not at the stock exchange sitting next to you at post 9. So let me ask you, you look at what's happened in the market to end last week and then this rebound today. What does it have you thinking about where we are and whatever sort of shakeout that was?
I think it took a little bit of the overbought characteristic off the market, which all else equal is healthy. But it does show you that even absent some very pointed catalyst, and you did have last week in the case of what Broadcom announced, you can get some of these rotations. And sometimes they happen sort of across the market. Sometimes they happen within sectors like technology. And you and I have spent a lot of time talking about this. I think the rotational nature of the market and how you've got to look below the surface of the indexes is something that's likely to persist. I think that's sort of one of the momentum trades is actually rotation, and I don't think we get out of that anytime soon.
What do you think the impact is of this massive IPO to just shifting capital around, the way people are positioning around what will be the biggest IPO ever? There's been a suggestion among some market watchers that was in part why we saw the kind of violent activity we did in some of those chip names. I mean, even Ed Yardeni is talking about that pulling capital away from other stocks. Do you buy that?
Well, yeah, when you think collectively about the big IPOs coming, the argument that has validity is that the scarcity premium could get diluted a bit with the size of these offerings, even though the float is relatively low. So I think that was probably part of what we're experiencing, what we did on Friday. So much for that today.
Yeah. I mean, do you feel like the conversation on, I don't know, Thursday, Friday was, hey, is money going to come out of tech? And then are we going to have this broadening move? We're going to start positioning ourselves for when we think the end of the war is going to happen. I just wonder if today, even in one tiny sample size, is a bit of an indictment of that idea that the tech trade is where it's at. And the tech trade is going to be where it's at for a good while. And any useful dip that people see to take advantage of, they're going to do it before they start putting money in other parts of the market.
But, Scott, I would say by tech trade, I would make that a lowercase t in tech, because I think what's happening here goes well beyond just the S&P 500 technology sector. You've got the Russell 2000 handily outperforming the S&P 500. Within the Russell 2000, you've actually seen some catch down on the part of the non-profitable names, a little bit of a convergence there. And you've got equal weight about in line with cap weight. So there's lots of ways to slice and dice breadth and narrowness or lack thereof. But I think this is a broader AI tech infrastructure build out that is not just accruing to the benefit of the large cap tech sector within the S&P.
How are you judging what the Fed might or might not do? I don't necessarily care about what the market is pricing in, because I don't credibly see that this new Fed run by Kevin Warsh is going to raise interest rates, despite what conventional wisdom might tell you about where inflation either is or where it may tick to from here. I don't know how you feel about or think about that at a time where we are thinking about rates backing up further and inflation still not at target and maybe remaining sticky.
Yeah, I don't think the Fed is going to be in any position to consider cutting rates here. And you might actually have some convergence in terms. I'm hiking, yeah. Sorry. Well, no, I don't think cutting. I think cutting is off the table. You got the market pricing in a hike, about a 75% chance that the first hike comes by the end of the year. I think that the data on both sides of the Fed's dual mandate is supportive of that. So I don't think you're going to see Kevin Warsh get back against that at this point. I think what's going to be more interesting is in the short term, what Warsh's approach is to the periodicity of press conferences, what his views are on the publishing of the dots plot, the summary of economic projections. Does he want to have fewer Fed speakers out there in the realm of, Federal Open Mouth Committee? So I think that's going to be the focus near term, particularly the first meeting, is how he lays out the framework for thinking about this. Every data point in the meantime, both on the inflation side of the mandate and the labor market side of the mandate, is going to adjust those market-based expectations. But given what we know now, I think the next move is more likely to be a hike than a cut.